morning, everybody. My name is Roger Edwards and I'm the Marketing Director of Protection Review. And on behalf of everybody on the team, I'd like to welcome you to ProtectX 5. Now, whether you're watching this today, live on Thursday, the 9th of September 2021, or whether you're watching this later as a replay, I'd like to thank you so much for tuning in. I'd also like to thank our event partners, iPipeline and Munich Re. We do really appreciate your support. Munich Re are going to be putting together a reaction video to this event, which you'll be able to watch in a week or so's time. Now, ProtectX 5 is an InsurTech special, and we've carefully chosen our speakers and panel guests for their technology, knowledge, and expertise. But the format of ProtectX is exactly the same. 7 speakers, 7 minutes each, hot topics, controversial topics, topics that create debate. And then after the speakers, we'll have a live panel discussion with our panel guests. And we'd like you to get involved in that debate. As always, we're going to be using Twitter as our chat platform. We'd encourage you to post questions, to post comments, to involve yourself in the debate. So here's how to do it. Use the hashtag ProtectX2021. That's ProtectX2021. Use that hashtag in any tweet, any retweet, any reply, so that everybody can see what you're posting and everybody has a chance to get involved in the debate. In previous ProtectX's, we've actually managed to trend on Twitter for the morning of the event, and we're really hoping that we'll be able to trend again today. Before we get started, just a quick reminder, the Protection Review Conference Dinner and Awards is taking place on the 8th of December. It's in London at the Landmark Hotel, and it's an in-person event. And you know what? We really can't wait to welcome you back to the Landmark. So let's get started with ProtectX 5. And I'm delighted to welcome to the virtual stage from iPipeline, Mr. Ralph Tucker.
Hi, welcome. My name is Ralph Tucker, Enterprise Sales Director for iPipeline. I'm delighted to be part of the team, along with the Protection Review, to bring you this latest in a series of the ProtectX. It's great to be presenting from our new offices in Cheltenham. It's fantastic to see people coming back to the office, really throwing themselves into the teamwork, and importantly, getting that face-to-face idea generation and collaboration going. It's such a huge part of our industry, and it's really important to be able to bring those relationships and get the collaboration and the face-to-face relationships going again. And as I've said, the face-to-face is intrinsic to our industry. It's hugely important. And as it stands, we're planning a small event to watch these clips and discuss what we know will be a great set of presentations and look further to build on the success of what we're doing here today. So when we talk around change of offices, change of location, our workforce is changing. The habits within that is changing. Housing pressures, economic pressures, the immediacy of service, of purchase, and also of goods and services that people rely on every day is changing. And the engagement with our customers is changing. And how do we reach the customers that we know we need to help and the people that we need to protect with the services and the products that they so desperately need? And how do we do this remotely? And how do we embrace the digital capabilities that we have in other parts of our lives reflected more accurately in our industry? So when we talk around these elements, what we're trying to do here is really bring together the latest technology, the latest service propositions. And it's great to have seen in the pandemic that we're beginning to come out of, we're showing the sort of light at the end of the tunnel, the green shoots of recovery are more than visible for us all to see. It's actually people have taken that opportunity not only to mend the roof when it's raining, but actually mend it when the sun's shining. They've taken this opportunity to be able to enhance their technology, enhance their service proposition, and enhance the products and services that they put out to the end customer. And these are our customers. These aren't people that don't exist or are at the end of a very, very long supply chain. They're immediate, and we help them with hugely critical and fundamental services and products right at their very hour of need. And to be able to do that and keep pace not only with our industry, but with other industries that we're competing with for the attention and the time of the people that need us most. This is why the element of change is always with us, and we need to react and we need to develop, we need to move fast to keep pace with not only our industry, but all the other demands of our customers. So when we talk about change, what do we mean? Well, from our perspective as a leading technology provider in our industry, we're seeing the rise of some macro themes. Personalized dynamic cover. So what do I mean by that? Well, I mean that the IFA or the advisor or whatever the process that the client goes through, they give fantastic advice at the point of the advice. And this is where we see underwriting and policy conditions and the actual recommendation being more like a Polaroid, a snapshot at the point of advice, at the point of that particular advice and that person's circumstances is made. What we are heading toward is more like a real-time GoPro, where what we're saying here is that no longer a fixed snapshot frozen in time. This is empowering change and providing systems and capability that can cope with that real-time change in a person's circumstances. And more importantly, putting the customer at the heart of that change. The self-service generation is here, it is with us, and it's here to stay. And this is why we need systems, capability, and products that can support the modern lifestyle. Because we all know that, the story of 30, 40 years ago, where you grow up, find a boy, find a girl, fall in love, create a family, go through those life stages, doesn't exist anymore. We're in dynamic, flexible, fluid life stages. People working abroad, not working, taking career breaks, moving house, not moving house, scaling up, scaling down, all these things. And we expect policies from 50, 60, 100 years ago in their fundamental design to cope with this new dynamic life. It's time we change, and we need the systems and the process and the capability to affect that change. This event has come at exactly the right time. And here at iPipeline, we have never been busier with conversations across the board around our broad capability, from advice all of the way through to policy servicing and claims. And whether that takes in underwriting, the advice journey itself, servicing, or even the data that underpins everything we do here at iPipeline, we are seeing these conversations proactively be used to improve the outcomes, improve the products, and improve the service delivery to our end customers, ultimately driving a better user experience, creating relevance in the consumer's life for our products and services, and really taking what we do to the next level. I'm looking forward to hearing from our speakers from across our industry, whether that be reinsurers, consultancy world, or indeed at the coalface with the advisors, demonstrating the skills, knowledge, and passion that's made our industry famous. It's what we're known for, it's what we bring. But above all, we bring resilience. We've had an incredibly tough time, and we've come through that, and we're still full of ideas, we're still full of enthusiasm, and we're still committed to helping our nation create financial resilience and security for themselves, the individuals, their families, and their businesses, and above all, have that knock-on effect to create wealth and resilience within our nation. iPipeline is committed to growing the protection market, and we all look forward to working with you to achieve this goal. Thank you.
Thank you so much, Ralph, for setting the scene for Protect X5. Our next speaker is from Cap Gemini, so please welcome to the Protect X stage, Vishala Ravepati.
Hello, everyone. We need to talk about the macro shifts in the UK protection market post-pandemic. But before I kick off, for everyone who's registered and watching this, hope all of you are doing well and safe. It's been quite a roller coaster ride for all of us. And second, Protection Review. Thank you so much for giving me the opportunity to speak on a topic that's extremely relevant in today's world. First, I'd like to kick this off by sharing my own experiences. If there's anything that the pandemic has taught me, it's to do three things. One is to prepare, second is to protect, and three is to adapt. We live in a world of uncertainty, and all you have to do is prepare yourself to face the unknown to the best of your ability. Two is to protect yourself, not just protect yourself, but also your loved and dear ones. Three is to adapt. And what better example than this? We would be sitting in a conference or in a room talking to each other, but here we are. I'm talking to a screen and you're sitting on the other end of the screen listening to me. But that's what we do. We adapt. Let's go back to the first two P's, which is prepare and protect. Now, this is a philosophy and a concept that's not alien to our Gen X and older generations, but has been alien to the Gen Zs and the millennials and Gen As up until now. So in my mind, that is the first macro shift, is the customer base, change in the demographic that the insurers would have to cater to at this point. And the second macro shift is linked to the first macro shift, which is expectations. Now, the millennials and the Gen Zs are exposed to e-commerce where you are used to convenient, prompt, and a seamless customer experience. Now, this is a shift that the insurers have to keep in mind because this will become table stakes moving forward. The third macro shift is, again, on the other end of the table, which is your agents and brokers. Not only do they have to service a new customer base, adapt to new ways of selling, but also adopt new ways of servicing their existing clients. So digital adoption becomes key at this point, and the insurers have to bear this in mind and enable and use technology to help their agents and brokers succeed in their endeavors in selling to a new customer base and existing clients. Now, these are my observations on the market changes, but obviously a point of view goes only this far. So at Capgemini, we do a tremendous job in researching and gathering data to publish a wealth of reports. And one such report is the World Insurance Report. And I'm glad to say that my point of view was not very far off. And from a stats standpoint, we interviewed about close to 750 customers in the UK, and 59% of them were millennials. And the common themes that came out of the report was 1, surge in demand, 2, expectations, 3, digitization, and 4, sustainability. We did touch upon the first 3, but sustainability we'll get to in a bit. Our research found an increase in demand in life and health insurance by greater than 10%. And we all know who's driving that demand, millennials and Gen Zs. Now, the biggest disconnect that we found through our research is between the customer and the insurer. The insurers do not think that their customer base needs as much advice as they do. And the interesting point is the millennials and the Gen Zs need the most advice compared to Gen X and the older generation. And the fact that they're driving the demand, it is pertinent that the insurer keeps this in mind and attend to it. If not, they're just going to be left behind. So how do the insurers get to their customers to provide the right level of advice? What our research found that 50% of the customers do trust digital channels, but when it comes to the point of sale, they still will look for an agent or a broker to help them make the right choice when purchasing a health or a life insurance product. Now that we know that the agents and brokers have to provide that high level of advice at point of sale, it's also important to know that the traditional ways of providing that advice is way past us, because you have a new customer base and they're looking for a prompt, convenient way of receiving that advice and through channels that are more digital in nature. So keeping that in mind, the insurers will have to invest in digital tools to enable their agents and brokers to succeed and better serve their clients. But surprisingly, at this moment, what our research found that the UK market lags behind the global market by 30%. And this is something that the insurers have to address sooner than later. So we spoke about the surge in demand, we spoke about expectations, and we spoke about digitization. The last macro shift is sustainability, and that's one of the most important topics that everyone has to keep in mind. Our sustainability IT reports show that about 18% of the organizations have a sustainability roadmap and know how to get that, but we do have a long way to go. We're already seeing insurers and investors diversify their funds based on ESG scores. But my question is, how long before customers start looking at ESG scores, be it an insurance customer or a retail customer, before making a purchasing discussion? That has to be addressed and is table stakes at this point. Just to recap, we spoke about PPA, which is prepare, protect, and adapt. And we've also spoken about how the insurance companies have to address the surge in demand, the expectations of their new customer base, enabling their agents and brokers with digital tools, and a major focus on sustainability. I hope this was insightful. And if you have any further questions, please feel free to reach out to us. Happy to have a dialogue on this topic anytime. Bye.
Thank you so much for that thought-provoking talk, Vishala. Don't forget, if you've got a comment on what our speakers are talking about, put it on Twitter and include the hashtag ProtectX2021. So let's move on to our next speaker. From the Mortgage Advice Bureau, please welcome Andy Walton.
We need to talk about remote advice. Has customer and advisor engagement changed forever? And I guess the simple answer is yes, it probably has. We've just gone through 18 months of pandemic. It's changed our perceptions on life. It's changed how we operate. Absolutely, things have changed. But the question is, has it changed in relation to our communication with customers? And I definitely think it has. I don't know if you remember in 1985, Aretha Franklin's song, Who's Zooming Who? But that was a jolly good question. Do you remember this song? Here we go. Let's see if I can get it on. Yeah, she is, look. Who's zooming who? Yeah, who's zooming who? Very, very good question, Aretha. Good question. Who is zooming who? 35 years later, we find out the answer to that question. And the answer to who's zooming who is around about 300 million people every single day having meetings on Zoom. And if you add in all the other virtual technologies as well, it's over 500 million people every single day. And this is young and old. Everybody's been impacted by this, haven't they? So look, we need to now think about how does this impact ourselves advising on protection? Should we be using this technology? So let's have a think about face-to-face versus virtual technology. I've been talking to a lot of advisors about this over the last few months, and they say to me the number one gain for them using this technology is all around productivity. If you think about it, if it's going to be a face-to-face meeting, somebody is giving up a lot of time. Either the advisor or the customer, somebody's getting in a car, somebody's driving somewhere or getting on public transport, somebody's spending huge amounts of time getting from A to B. When I talk to advisors, they say, it makes so much more sense from a productivity point of view to do business face-to-face, but doing it virtually. So that's a massive tick in the box, isn't it? I think the other thing is that you've also got the ability to share things with customers much easier using virtual technology. And you might say, well, no, if you're face-to-face, surely it's easier then. But I don't think it is. If you've got the customer coming into the office, you've got to tilt the screen round somehow so they're peering side on to a screen, more than likely. If you're in their house, you're sat on their sofa as an advisor, and what you're going to do, get each of them either side of you, cuddle on the sofa with your laptop in front of you? I don't think so. If you're sharing things virtually, it's simple. You can flick from screen to screen and you can share all sorts of things. At Mortgage Advice Bureau, we've got lots of stuff that we can share with customers. We've built in risk reality results into our process. We've got nice graphical budget planner displays, all sorts of things that we can share with the customer. What about phone-based versus virtual technology? Is it something that we should be doing more of? I think a lot of protection is sold in the UK over the phone. Well, here's something I want you to think about, right? Let me just demonstrate something to you here. You see, the point is, this isn't the 50 Shades of Grey thing about to happen, don't worry. The point is, if we're selling protection, advising protection over the phone, we are doing it like this. We are doing it blindfold. I mean, I can't see you. You can't see me. Can you imagine starting off a meeting with a customer saying, can you just please put on this blindfold? Because obviously I don't want to look at you. You don't want to look at me. I don't want to see what reactions you've got. I don't want to know if you're smiling or frowning. I don't want to share anything with you. This is phone-based advice. It truly is. We're blindfold. And it's crazy now we've got the technology that we're doing any business whatsoever using phone-based advice. It is crazy. There's so many. Let me just take this off so I can see again. Look, I'm here. You can see me. I can see you. You can see reactions. It's critical for us to, I believe, use this technology with customers where we would have been doing it face to face. I mean, one of the really key things, I think, not only, we've talked about productivity gains, we've talked about being able to share things with customers so easily, flicking between screens. We've got advisors that are even getting customers to complete the application form, handing them control of the mouse, and they're filling in the protection application form there and then. It's all sorts of things are possible. We're now using videos and interacting with the customers and sharing things during the sales process. Look at this little clip. It explains it better than I can in 60 seconds, all of that. But here's another thing. If you're doing protection over the phone, by default, you're only talking to one person. You haven't got two people on the phone. They probably haven't put you on speaker, have they, at their end? So you're talking to one person. And it might not be the person that's motivated more about the protection. It could be the person that's leading on the mortgage, let's say, or to do with the finance and the money, isn't the emotive person that might be thinking more about, we need to look after the children and make sure we've got the money. So we might even be talking to the wrong person. But how easy is it to get two people, together in the virtual world of something like Zoom? And the answer is very easy. So I think there's so many advantages for us to be using this technology more and more and more. And I think we should be doing more and more and making the whole advice process much more interactive, showing visuals, showing videos, interspersing, the 45-minute, an hour-long meeting. And that's another thing that I think customers' propensity to stick on and listen is far longer, when it's sort of face-to-face virtually than it is on the phone. And we've seen evidence of that. So Aretha Franklin's question was, who's Zooming who? Well, the answer is, in my view, we all should be. Thanks for listening.
Thank you so much for that, Andy. I really loved the comments about telephones. Let's move on to our next speaker. Please welcome from PartnerRe, Sabrina Molteni.
We need to talk about how protection distribution will evolve as a result of the global shifts from a global pandemic. 2020 was a challenging year for the protection industry, as for many others. Sales of protection products were significantly impacted by the pandemic, particularly in face-to-face channels where the strict lockdowns really limited activities. In the UK, protection sales were down 13% year-on-year in the second quarter of 2020, with mortgage brokers and IFAs being the worst hit. But this wasn't just a UK problem. Some Asian face-to-face channels recorded 70% volume declines. And in a US survey, half of the agents reported struggling to build new customer relationships during the pandemic. In contrast, digital platforms were more resilient and managed to maintain volumes. On the consumer side, buying protection products was not initially a priority for customers. as they struggled to adjust their daily lives and faced concerns over their finances and employment. But COVID-19 did increase people's awareness of health risk and highlighted the value of insurance products. As the pandemic developed, we've started to see an increased interest in life and health insurance products, with life applications in the US rising 4% in 2020, the biggest year-on-year increase in the last decade, and a significant increase in online searches for life insurance products in the UK. Additionally, the UK comparison website ActiveQuote reported a significant increase in the number of PMI policies sold last year, with around 90% of these policies sold to those who have never had private healthcare before. The pandemic has also changed how consumers wish to engage. Customers have shifted to digital channels for many facets of their lives, and this will impact how they buy insurance as well. It could become a key differentiator for consumers, as was illustrated by a market survey in Asia, which found that selecting an insurer capable of processing their policies online end-to-end is now a top priority for customers. But is the distribution of protection products ready for these digital demands? Distribution has traditionally been focused on face-to-face meetings and centered around key life events such as mortgage sale. The pandemic has forced a change in the distribution landscape that will see a shift away from traditional face-to-face interactions. Key to this is digital capability, and we have seen an acceleration of digitalization projects. A lot is already being invested in technology to build this digital capability, and the pandemic has given new impetus to this transformation. The traditional face-to-face channels will need to be digitalized, but even in this new digital reality, agents and brokers will still have a unique role to play by providing expert and trusted advice to consumers. Customers' needs are very tailored and personal, and buying protection is a significant financial decision that many customers are not comfortable making on their own. However, the advisors will need to adapt to the new ways in which customers want to be interacted with. They will increasingly be required to use digital tools for virtual contact with clients and to provide online advice. Face-to-face interactions will likely continue and be preferred in many cases, but they will be virtual. So, for example, use of iPads and tablets to explain a product or to fill in an application or a form. But it's not just consumers who will expect more digital interactions. Advisors will too. In particular, the training and support that product providers give their advisors will increasingly be delivered through virtual platforms. A channel that in the past has been typically face-to-face is the bank channel. Banks have traditionally sold insurance via their branch network, but in recent years have started shifting a lot of their customer interactions online. The pandemic has accelerated an existing trend of reducing branch footprints and encouraging customers to interact online. Fewer in-branch interactions will mean insurance sales also need to follow suit. And a few things that banks are already doing include finding new ways to generate leads other than in-branch referrals, for example by using analytics to identify customers with protection needs, or providing all advisors with the tool to operate both face-to-face and virtually, or continuing to develop their digital app propositions to integrate insurance sales. These changes, whilst initially disruptive, will have a profound impact on the capabilities of banks to deliver protection to their customers, by both increasing the resource agility and allowing banks to interact with customers at the time and place that suits them. Unsurprisingly, the direct and online channels have proved much more resilient during the pandemic. However, the extent to which these channels will grow in the future remains uncertain and will depend on the market and the level of digitalization. In China, for example, the channels are expected to grow materially, as companies such as Pingyan look to leverage AI and apps to target customers in their pool of users for upselling of more sophisticated products. In other markets, including the UK, direct and online channels are unlikely to overtake the traditional channels in the short to medium term. However, even in these markets, digital distribution is being invested in heavily, and combined with shifting customer preferences towards digital, we would expect increased market share in the longer term. One of the difficulties of direct and online distribution is that it's challenging to engage customers, and this is evidenced by the relatively low conversion rate that we sometimes observe on digital apps or online propositions. An option could be for insurers to pursue a more omni-channel approach. some insurance products will likely start to be sold through a digital-first approach, where customers start the sales process from a website or an app before the sale moves to other channels to complete. Finally, something that we might see in the short to medium term is insurance companies partnering with tech companies to provide more technology-driven propositions whilst building for longer-term capabilities. This is already happening in Asia, and we may see that in other markets as well. So the pandemic has given new momentum to important trends that have been developing in the protection industry over the past decade. It has accelerated the process of digital transformation that will change the distribution landscape. This evolution is vital to the industry's ability to meet the changing consumers' expectations and protection needs.
Thank you so much, Sabrina, for that really interesting talk. And what did you think of Sabrina's ideas? Leave a comment on Twitter and use the hashtag ProtectX2021. Our next speaker is Ian McKenna from FTRC, so please welcome Ian to the virtual stage.
We need to talk about the opportunities emerging technologies give us to grow the protection market and how COVID has impacted advisor behavior across financial advice, not just in protection, but wealth management and mortgages too. I believe it's time to transform the market and that the tools needed to do so already exist, but few organizations have taken advantage of them. Let's explore several ways we can do this. We all know income protection should be the best product in the market, and COVID has stimulated unparalleled interest. But many advisors at Protection Guru's regular forums raise concerns over policy wordings. The Resolution Foundation, working with Lloyds Bank in 2018, identified that no fewer than 73% of the bank's customers with steady jobs had, in the report's words, volatile income. The first technology I want to call out is open banking. It has transformed the amount of information available on an individual's income and expenditure. So why can't we build products with the flexibility to allow for increases or reductions in cover proportionate to changes in an individual's circumstance? Advisors worry about setting up plans where, when the client comes to claim, the policy may not pay out fully because of fluctuations in income. The technology exists today to address this. Let's embrace it to build the products consumers really need. The next opportunity is the ability to help advisors and consumers sell or choose better products, not just the cheapest. If a better product is available for a few pennies or pounds more, shouldn't we highlight when this is the case? For the last 18 months, advisors have been able to compare quality with price to help consumers understand value using the product features report in iPipeline's Solution Builder service. Powered by Protection Guru, this adds just 60 seconds to the advice process. We now have clear evidence based on actual submitted proposals that, given the ability to compare quality and price together, advisors are 50% more likely to recommend a better product, not just the cheapest. And the more advisors use such services, the more the quality of the products recommended improves. During COVID, added value benefits have become seen as an integral part of the next generation of protection plans, providing services consumers will use year in, year out, so that cover is about more than just helping when a catastrophe happens. If there is one time you don't want a cheap product, isn't it to protect those people and things that you care most about? Third, let's look at how to understand which product features advisors will actually select for clients of different ages, genders, and circumstances. A byproduct of the features report is that Protection Guru can identify which features advisors prioritize. This gives us invaluable insight into what will cause advisors to recommend products. Because our data is being supplied using APIs, Protection Guru has a detailed understanding of how advisors compare products and how their behavior changes both over time and for different clients. We can see how advisor preferences change month on month. For example, at the peak of the pandemic in April 2020, remote GP services were the most popular benefit selected. By April this year, this had slipped to third. although across the 12-month period was actually the number 2 quality measure selected. But what were their other preferences over that time? Harnessed correctly, we can transform product design and distribution with this information. Working with wealth tech is our next opportunity. People in the market say wealth advisors ignore protection, but we need to recognize a major contributing factor. Wealth advisors have embraced far more technology than protection firms, and COVID has been a huge further stimulus. If we want these advisors to work with our products, we need to understand how they work. If you work for an insurer or reinsurer, can you name the top 7 wealth practice management systems, the top 3 cash flow planning tools, or the 3 leading client portals? Similarly for mortgages, who are the leading sourcing tools? Again, the leading practice management systems or client portals. These businesses now put technology at the heart of their operations. And if we're going to persuade them to maximize their protection sales, we need to make our products and services interact with the technology through which they run their businesses. A dedicated website now provides comprehensive information on advisor technology, including a directory of over 200 systems and reviews on 100. The reviews are updated as new features and functionality are added. Advisorsoftware.com is a powerful resource to help insurers and reinsurers understand how wealth and mortgage advisors run their firms. My 5th example demonstrates why such knowledge is valuable. In identifying additional advice opportunities using remote fact-finding. Inviting clients to complete their fact finds online before meetings is a major trend in wealth firms. The pandemic has really catalyzed this. One system, CashCalc, receives over 5,500 such online fact finds each month. Their system identifies if the client has protection cover, a mortgage, or dependents, and nudges the clients towards protection advice if they have a need, before they even meet with their advisor. This creates an additional advice opportunity and is just one example of how we can work more closely with wealth advisors and their technology. Next, let's put unparalleled data at call center advisors' fingertips. In that environment, it's important to close an inquiry while the prospect is on the phone. The last thing you want to do is to have to call back if you need details on a provider's small print. A new Protection Guru tool makes all the data we have in our systems accessible in real time with just a few mouse clicks. We believe it can help more advisors close more sales more quickly. These are all issues we need to talk about now.
It's always refreshing to hear Ian's views on the InsurTech landscape. Now it's time to move on and consider the advisor perspective. Please welcome from Heron Financial, Matt Coulson.
We need to talk about the growing use of AI and how the advice market needs to adapt to this new normal. So before we start to talk about how AI is going to impact underwriting, and is already impacting underwriting as well as the client experience in the protection world, it's worth recapping some of the challenges that we've all faced to help understand exactly why we need the help. From a client point of view, even before they've started, it's difficult to understand where to go to look for that advice, where to go to arrange that cover, never mind how much cover they need to take. Whether it be comparison sites, advisors, friends, family, colleagues, insurers, banks, everybody's got an opinion on the level of protection that that client might need. And it can be very confusing for a client to understand exactly what's right for them. So there's already a barrier in terms of getting to the advice and understanding what kind of cover and how much of that cover I need to take. Beyond that, there's a question of budget. What does it cost? Clients have got no idea, in many cases, exactly what they need to set aside. They have no idea what's normal, what's typical. What does somebody like them normally set aside when it comes to protection? Is it £10, £100, £1,000? It can be tricky to understand what normal looks like. So the budget in itself can prove a barrier. We've all had conversations with clients around budget, and not knowing where to start is often one of the biggest objections. As well as that, You've got changes in circumstances. When is the right time to review? And if it is a right time to review, how do I access that advice? What does that review look like and feel like? What are the circumstances that prompt the need to have that review? All of these things could potentially prevent a client from engaging in the process before they've even started. Beyond that, you've got tricky elements of underwriting that we all know about and have probably experienced firsthand. Complex medical histories can hold up a process to the point of grinding it to a halt, potentially preventing some clients from proceeding with something they really, really need. The process becomes long, drawn out, and difficult, so they walk away. We've all seen that. We've all experienced it. You start to find GP reports being requested, medicals being requested, and the whole process slows down even more. How can we expect GPs to prioritize the completing of a medical questionnaire for somebody's insurance application when they've got a queue of people waiting outside their surgery, particularly over these last 18 months? We know the pressure our medical professions are under. Why are we adding to that pressure by expecting them to complete these forms and fill in this paperwork? That's why it's moving slowly. They have no time. Again, clients are walking away from the process when they really need that cover. When it comes to medicals, has something popped up? Is there a biological marker in the blood? Was something done erroneously on the nurse screening that then resulted in a lab error? And all of a sudden, we're booking another one in and the client decides, I don't want to go ahead with this anymore. This is too complicated. This is too time consuming. Is it really worth it? Well, of course it is, but we're not making it easy. You've got financial questions being asked of your clients. Are you applying for a particularly high level of cover? This cover doesn't seem typical for somebody in your circumstances. Can I ask you some questions about that? Is this a mortgage or protection? Again, we're risking a client leaving a process puzzled, confused, and probably a bit upset. So with all of these issues before and during the process, how can we involve AI to step in and help and solve some of these challenges? Well, the first one, and I think it's worth just flagging that this is not robo advice, and I don't think any of us would advocate that. But the first one is as a robo AI powered paraplanner. So when it comes to the client asking, what cover is right for me? Where do I start? Which types of cover do I need to consider and how much? Why not let an AI pull in the data, assess the client as a typical example of all of these other clients that they've previously dealt with and seen? Look at what kind of cover has worked for them. Make that initial suggestion. Do the starting research. Be the paraplanner. Surely it's better to save your time as an advisor to have a better, more meaningful conversation with your client rather than sitting there quoting and Trump coming up with different suggestions before you even got going. Let the AI help. It's not a threat. It's an assistant. If the client wants to grant access to their open banking, could the AI make some suggestions around budget? Are there things within that client's spending habits that need to be reviewed? Could the AI give the client a clue before engaging as to what somebody in their situation would typically set aside? Somebody with their outgoings, their commitments, their dependents. All of this is possible. The data is there. We just have to make it neat and tidy and allow access to it. If the client is already heading in your direction with an idea of what the budget needs to look like, isn't that a good thing? Isn't that something that can help streamline that process? Isn't that a conversation starter? It's another method of AI stepping in to help. And of course, the underwriting automations that we all know about, that process of speeding through. No need for GP reports, no need for further medical questions, no need to wait for that consultation that's booked in with your specialist or GP 2 or 3 months down the line for a routine checkup. We don't need that information. We pull the data in, we assess the client versus the big data, the machine learning spits out a result and advises that actually this client doesn't present a risk. We can offer cover to this client. We can get your client the cover that they need more quickly without these onerous processes. So what do you need to do in order to get yourself ahead of this and get involved in this? First of all, you need to make sure your data is clean and tidy. That's the value in your business. Make sure that the data you hold on your client is accurate and up to date. Ask them to update it regularly so it's always ready for when the AI steps in and starts to make the assessments, the data must be accurate. And secondly, you need to speak up for the advisor, speak up for the advisor community, and make sure that you lend your voice to those around you calling for the advisor to remain in the center of that process, despite the AI coming in and providing the help. If we work together, we can ensure that we are front and center of the advice process with the help of AI to give a better client experience and more time for you to talk to your clients and give the advice that you want to give. So let's embrace it. AI is already here. We just need to make sure that collectively we pull together and ensure that the advisor community remains front and center of that process. Thank you for listening.
Thank you so much for your insights, Matt. And turning now to the provider viewpoint, please welcome our final speaker from Zurich, Louise Colley.
We need to talk about consumer behaviour post-COVID and what this will do to drive further expectation change in insurers and advisors. As we finally move out of lockdown and return to some form of normality, we cannot underestimate the profound impact that that period of time had on consumers and the way they went about their lives. The use of tech became such a core part. The way they went to work, the way they interacted with their friends, the way they purchased, and how they dealt with service organisations like ourselves. It changed the way they went about that, and it's here to stay. What does that mean, therefore, to insurers and advisors? We now need to seriously accelerate how we can deliver to the customer expectations because they're higher than ever before. Let's first look at the use of digital tech.
Lockdown meant those segments which were not necessarily engaged with digital had to undertake a digital crash course. Email transactions grew exponentially, as did web chat over telephone and paper channels of communication. Insight continues to tell us now that over half of consumers want to manage their personal finances online. 43% agreed they had managed their financial products online during lockdown. And the key outtake is that they will never go back to how it was before. What does this mean to your business? Are your customers able to meet their service needs digitally? However, the biggest shift was the use of digital services, virtual services, whether it be talking to family over Skype, conducting business meetings via Teams, or actually patients being triaged for illnesses. We've also seen how advisors have moved to online meetings to be their main contact with clients during lockdown. Recent insights suggested, however, only 1 in 10 advisors intends to continue this, and the rest will return to face-to-face interactions. The key question is, did we leverage fully the digital services we had available to ourselves to support customers during lockdown?
It's interesting because we already have many innovations within our sector, in particular around new business processing. We're probably some way off the curve in terms of other sectors, but Zurich is one of few who actually allows the advisor to send a secure link to their client during the new business process to obtain health details. Yet why is it that during the lockdown, we anticipated lots of advisors would use this, but take-up, whilst increased, wasn't sufficient? Why was that? You would have expected consumer behaviour would have been responsive to that. They were adapting and working online, liaising with organisations and interacting through online video calls for interview meetings. So why not? Wouldn't that have been the most appropriate thing to have sent a link? We were very surprised. We therefore conducted some in-depth research to try and understand what consumers actually wanted, particularly given their new behaviours. This is what we found.
We asked customers what is their preferred format when completing health and lifestyle questions. 65% said they would prefer to have a link sent to them so they could complete themselves online. We wondered whether this was high due to lockdown and the adoption of greater digital services. We therefore asked what this would have been 18 months ago, pre the pandemic, to see if any differences existed. We were surprised to see little if no change in the numbers. So, 8 out of 10 customers want to be able to perform this task themselves online. It also confirms we should be giving customers this choice. Today, whilst the take-up of this facility has increased during lockdown, the numbers don't accurately reflect the actual demand as what the customer would prefer. So why should we encourage more use of this capability? Time saved, sat with the client, going through the medical questions. If anything, for some lives, particularly if joint, it can take anything up to 10 to 30 minutes per life, dependent on the number of disclosures. The benefit also of the advisor not having to ask sensitive questions directly face-to-face with the customer. Also, customers do not always have all the information to hand, particularly dates of illnesses and medication prescribed. This facility allows them to do this in their own time. Also, the most important thing, however, is the advisor still has full control of the process, and they will be the first to see the underwriting decision to then discuss with the customer. Post-COVID, this service is even more relevant, with advisors conducting more appointments virtually. So having the ability for the customer to complete online is a great opportunity. Much debate continues as we await for the future when we will see customers allow insurers, obviously subject to AMRA, to have access to their medical records directly. We are still some way off this, so in the interim, this provides a great solution. It's a win-win, but it does tell us that we are not leveraging the digital capabilities that we have currently today.
What's really interesting from that insight is it tells us quite a few things. It tells us that actually customers want to do this in their own time, at their own convenience, at their own pace, and more importantly, to allow them to look information up if they don't have it to hand in the moment, particularly as they might not have when they're with an advisor face-to-face.
So in summary, due to COVID, consumers are more than ever before happy to use digital services. After all, it does make their life easier. And it's key that we offer the choice to them and not assume which preference they would prefer. In your business, are you ready to manage these increased service expectations through digital offerings? Do you offer the full choice as to how to interact? Email, web chat, virtual services? The list isn't getting any shorter, but paper post-COVID is certainly a no-no. Digital, as we know, is disrupting markets and changing the way organisations create value, recognising there are significant barriers still to realising that benefit. As digital strategies and developments ramp up with renewed pace, it is important for now that we make sure the digital services we have available are given to customers to use and not discounted. This can only but support a better customer experience for all.
Oh, well, thank you so much, Louise, for finishing Protect X off with that really, really interesting chat. And before we get on with our live panel debate today, I'd just like to say hello and welcome to everybody who's sat at the Andaz Hotel in London for our Protect X5 watch party. Yes, Kevin and Joe and the rest of the Protection Review team are in person for the first time in about 18 months. So I bet that feels really special to be actually out and about again. And as always, at Protect X, we want to send a great big thank you to the speakers. And I think you'll agree that the speakers this morning have given us lots to think about. AI, technology, telephones, so much for us to talk about, so much for us to think about. So what I'd like to do before we head into the live debate is just to do what we call a Twitter thunderclap. So you all know the hashtag ProtectX 2021. What I'd like you to do is get your mobile phones out now, or your iPads, or if you're on desktop, do it on your desktop, and type in thank you to the speakers, and maybe just a quick sentence saying what you took most from what you've heard this morning. And I'm just going to give you about 10 to 20 seconds to type those words in, and then I'm going to count you down from 3 to 1, and we're all going to press the send button at the same time. And what should then happen is that will send a tsunami of tweets across the Twitter sphere. It'll say thank you to all the speakers, but simultaneously, hopefully, it will make us trend on Twitter a little bit stronger for the ProtectX 2021 hashtag. So has everybody typed something in? Are you ready? 3, 2, 1, press send. Great stuff. Okay, so we have got a lot to talk about here in the live section of the show. So I'm delighted to introduce you to our panel guests today. We have got Rose St. Louis from Lloyds Banking Group and Steph Hayden from iPipeline. So guys, why don't you just quickly introduce yourselves, and just to make it a little bit fun, give me a fact about yourself, which maybe none of us in the industry know. So Rose, how would you like to go ahead first?
Thanks. I forgot I was supposed to be talking about a fact, but let me see if I can muster something up. So hi, everyone. Great to be here. Really delighted to be on the panel. I'm at Lloyds Banking Group, 6 months in, actually, which has been really exciting, and really looking forward to the panel debate with my esteemed colleagues, Roger and Steph. So interesting fact about me. I used to play netball for England. Some people know that, some people don't. So I was good once. I played England juniors, under 16s, under 18s and under 21s. And I have a bronze medal that England won at the World Youth Championships. So there you go. Interesting fact about me.
Fantastic. And Steph?
Oh, yes, you all know me, the excitable one from iPipeline, usually talking data and getting everyone interested. So yeah, I'm head of strategic partners, so I get to look after all our amazing intermediary partners, which is great. Like Rose, forgot about the fact. Well done. We're nice and organised. I guess fact about me that you may or may not know, which probably isn't surprising to a lot of you. I grew up in a pub. My family still owns a pub just off the A36, the Bell Inn. You know, just a small shout out there if you're ever in Salisbury. But yeah, that's me. Grew up in a pub, but perhaps that's not so surprising.
Thanks a lot, Steph. Now, one of the things that really struck me about some of the things that we heard today, and I'm thinking about Vishala's talk here from Capgemini. She talked a lot about millennials and a lot about Gen Z, i.e. younger people. And what was quite surprising was her angle that these people really want advice. They really want detailed advice. Now, again, maybe the perception that a lot of people have is that younger people actually aren't that interested in advice. They just want technology on their phones or enriching their lives. But actually, advice is almost secondary. So I thought that was a really positive angle. And I just wondered, Steph, if you could let me know what you think about that.
Yeah, I think this is something that I've felt quite passionate about in the past and really talked about. I mean, it's only a couple of years ago I was presenting at another event and talking about the fact that we shouldn't be using these sweeping generalizations around millennials and Gen Z and talking about them as if they're sort of terrifying types of categories of people. But actually, you know, when we start to use those sort of generations of saying, well, they're digital natives, so they're going to want to do everything online, they buy everything on Amazon, and we use these sort of sweeping generalizations, which are completely unhelpful to us, because what we see is when we actually do the research, and what Vishala was, you know, highlighting there is that we want advice just as much as you probably did 20 years ago. You know, we want the same level of advice. What's the difference here is how we want to interact with you. And I think that's the key thing here. And it tends to get lost as well, we just need to focus on creating online journeys, self-service. Actually, what we need to focus on is how we take data from customers, how we interact with customers, how we engage customers, and how we gather that information that we need to get that recommendation out to them. So I think that's the key thing for me. It's about how we interact and come across as a bit more of a digital experience for younger customers, but still recognize that at that final point, I want some advice, and we need to be able to offer that. And what we've seen in the industry is a rise from the intermediaries of giving flexibility. So saying to people, do you want to do this online? Do you want to do this with a little bit of help, talk to someone to be guided? Or do you want full advice where we go through everything? And the key thing here is about having a platform that can enable you to be able to offer all of those different routes to those different customers, because everybody is different.
Agreed. Rose, do you want to add to that?
Yeah, so I think Steph's spot on, and there should be never any question, do people want advice? They'll either opt in or opt out. But if they want it, it's not about it's about the how. We've heard a lot about kind of like how technology can enable advice. I thought it was really interesting that the evolution of traditional advice to prompting. And I think that totally leans into the mediums through which people take advice and consume our products. And I think that there's definitely something around research, how people get informed. People like me or people like you will buy like this, how we can use technology, AI to prompt, to inform, use data, open banking and all that kind of good stuff. But fundamentally, I say it's kind of like customers adopt the Martini approach. So for people who are old enough like me to remember the Martini advert, customers want advice or products or services anytime, any place, anywhere. So they will opt into those different channels, and it's our responsibility as providers to be able to facilitate that. You shouldn't just be able to service online. You shouldn't just be able to take advice face to face, in person, remotely, on the phone. It's up to the customer. And I think that what technology enables us to facilitate those needs, whatever the customer wants.
Now I've got it in my head of Leonard Rossiter and Joan Collins sat on that aeroplane with Joan Collins spilling the martini all over her dress. I think it's really important, because I sometimes get a bit grumpy when people refer to entire generations as if an entire generation is a specific target market. Millennials, it's like nearly 20 years worth of people, and same with Gen Z. And like any good marketing or company strategy, you have to segment your target market and talk to that target market and work out what it is that they need, whether it's a protection product or whether it's the technology that they want to use to deliver, to receive advice, or whatever it is. So we should never ever lose sight of the fact that our customers are usually subsets of much bigger markets. Another things that I was really interested in was obviously Andy Walton's really upbeat talk today, and great kudos to him for bringing Aretha Franklin into the discussion. Unfortunately, Andy will probably have to mute that bit when we put the replay up on YouTube, because we don't want to get a copyright strike. But it was a great way of demonstrating, and also, of course, putting on the blindfold to demonstrate perhaps the phone isn't the best way of communicating anymore. But I did wonder, again, going back to what you were saying there before, Rose, about understanding the needs of the customers. I guess there are people who possibly do want to continue to use the phone to communicate. They may not want to be seen on screen, especially if they've got a lot going on in the background. So Rose, what do you think of Andy's contention that it should be video communication going forward?
So I loved Andy's presentation. I loved a little bit of music. I was bopping in my chair. And I think that there's a lot there that totally resonates and I agree with. But doesn't matter how thin you slice, there's always two sides, isn't there? And, if you think about it, there are people that are visually impaired and they don't necessarily have a choice. So therefore, do they need to lean into kind of like a virtual Skype or Zoom or whatever call? Or there might just be people that actually they don't want to allocate that time to book in that much, and they just want to pick up the phone. I'll engage in lots of different ways. So it just really comes back to the customer, what their needs are. You might want servicing stuff done on the phone or online but you might want face-to-face, in person or not. So I think that's really important. And arguably, as our sector leans into becoming more and more inclusive and putting their arms in a greater number of segments of customers, we have to be able to facilitate that. And now I'm going to speak out the other side of my mouth and say, but clearly there's some huge benefits that we've been able to achieve as we've lent into like virtual calls. We've been able to get more than one person having a conversation, primary and secondary carers. There's been, I know Steph's got some research around talking about younger people as well as women getting more and more protection. That can only be a good thing. And that's exemplary behaviours that are coming out of our industry.
Steph, have you got anything to add to that?
Yeah, I think, again, ditto on the Aretha Franklin. Well done, Andy. Liked it. I think the thing that, one of the other things that Andy talked about during that call was actually being able to share some research with them, share some of these tools. It not only comes across as really good for the customer in terms of it shows your business in your best light, you're digital, you're putting your best foot forward, but it's also about how you engage the customers, which I think is really interesting, because by showing the customer some of the gubbins, the inner workings of how do we get to the price, how do we get to the recommendation, it fosters transparency. They're part of that and they're understanding that. And I think that's a key thing for particularly without using generalizations after I said about it, but sort of younger generation wanting to have access to research, they do spend more time researching on those sorts of things. And actually by showing your tools, you're creating that transparency and they're actually building that protection package with you. This isn't just something that I'm saying, here you go, this is what you need. It's the why you need this. And this is how we've arrived at this decision. It makes a better quality of conversation, fosters transparency, and almost creates what we call like the IKEA effect. You helped build it. You're more attached to it. You're more involved in that. You're more invested in that. So I think that's what's really exciting about that. Yes, it's about how we interact with customers and giving them that flexibility, but also bringing them into our process, I think is really great. And therefore, from advisors' perspective, don't be afraid of these online journeys and thinking that customers are just going to go ahead and do it themselves. Actually bring them into it, show them what you're doing and show them why your advice is the best. I think that's what's really interesting. So fostering that transparency, I think is really great. And I think that's what Zoom's been able to, and those sort of digital platforms have been able to do. But it certainly shouldn't say that's the only way and that's the right way for the business. Everyone's businesses are different. Everyone's customers are different.
And again, it's all about making sure that we do what the customer wants. And I recently I had to deal with an insurance company, and I'm not going to name them because hopefully they would be embarrassed if I did, but I had to send them an actual paper letter. I can't remember the last time I actually wrote a letter out. In fact, it hurts when I handwrite now. But that was the only way that I could communicate with them to get the particular process started. And I was really quite annoyed about this as well. Why can't I email you? And okay, there was a load of data issues and encryption mentioned, but no, they wanted a paper letter. And it did get me thinking though, how far do we take it? Does a company have to say, well, you can talk to us on WhatsApp, you can talk to us on Twitter, you can talk to us on Snapchat, TikTok? Do we give them absolutely everything? I guess there has to be a limit. Or do we just genuinely have to offer all these avenues of communication? Steph, what do you think?
Sorry, there we go. Good on the unmute. Yeah, I think the wider issue there is sort of looking at how do we allow customers to interact with us. I think we can talk about all the different channels and all the different methods of being able to do that. But one of the key things is empowering the customer to be able to go online and jump offline, to be able to put that data in front of them, to be able to gather that information that we did. We saw from Louise talking about Zurich and being able to actually input that information when you're ready in a time that's comfortable for you. I think that's what's more interesting, is starting to have a look at how we empower, stop kind of keeping all of this functionality in terms of what we need from customers and keeping that all in a very centralized place, empowering advisors and empowering customers to be able to be a part of that, and having platforms that enable that, I think, is what's really important there.
I think also making sure that we don't just focus on technology at the point of sale, but in the journey on the way up. And I think that the point around nudges and prompts helps customers get informed. It helps advisors empower customers and their clients to get informed as well, especially when we know that a whole bunch of our sector are great at kind of like tabling some really challenging conversations around health and lifestyle and well-being in the future. But if we want to really broaden our protection footprint across the market, we can use some of that education and technology and all sorts of different graphics to kind of warm people up to the idea of protection, to consider the future, even though it might be a bit dark, or the possibilities and the safeguards and the safety nets that we can help them put in place. That doesn't mean that a sale needs to happen right at the education point. And we know that clients are thinking about this, as we emerge out of a pandemic. So starting to drop those little nuggets of information and to make them think about stuff and put it right up to the top of their virtual in tray to start thinking about protection. Use technology to do that. That means you can table a conversation a lot more easily, or you can nudge them back into a journey or nudge them into the thinking. And I think that we've got so many different tools to do that and get that subliminal learning out there. That means that it's not a hard sell at the point of sale. It's just kind of like the continuation of a conversation around their holistic needs.
Thanks for that, Rose. Now, what does everybody think who's watching this, including the people in the watch party there in the Andaz Hotel in London? Do please continue to comment, ask questions, and put forward your views on Twitter, and use the hashtag ProtectX2021. Now, Matt Coulson talked about artificial intelligence, AI. Again, a really interesting talk, lots to think about. It's amazing, isn't it, how much you can get into a 7-minute talk. That's what I really like about the ProtectX format. We can be short, but we can be really thought-provoking. And AI, again, being a bit of a film geek, when people talk about AI, I just think about Terminators and Skynet, and is that the direction that we're heading in? We're handing over all of our power to the machines, and one day they'll turn around and bite back. But I guess that our industry has always suffered from an issue with trust, and we know that, as Matt says, there's so much that we could do to improve the customer experience and the advisor experience by using AI, maybe to improve the underwriting process, to mine data, etc. But do people trust us enough with that data? And should we be doing more to effectively win that trust from them? And actually, there has been a tweet from Phil Chalk actually saying, and I'll ask this as part of the question, do you think that Gen Z and millennials actually trust financial services and any company, I guess, with data, perhaps more than the older generation? So quite a lot in there. So it's really about AI and trust. So Rose, maybe you want to go first on that?
Oh, there was loads. I wrote down loads of bits around that. So I think the thing about AI is fascinating, right? And I think that people and advisors, as well as AI and technologies, can coexist, and coming and bringing those two things together can absolutely benefit the customer. It's not a competition. It's not one or the other. I think if they come together and collaborate as the way that can serve your business and serve the customer, that's brilliant. I think that trust is a really interesting point around that when you anchor that in with data. So there's other research that says that, what we're trying to do is gallop to, from an underwriting perspective, let's like shortest question set, let's ask no questions and then just present something. Let's use open banking and data and all sorts of data to just pull in a price and say, here you go, Roger, Steph, here's your price and you're good to go. And I think if you throw back the question of trust into the mix, who trusts that? You've not asked me anything. You don't know about my health. You don't know, when I went to the doctor's last, so there's this kind of like disconnect there of, if you haven't asked me anything, how do I know that this policy that I'm going to buy is actually going to pay out, because I haven't answered any questions, and what am I signing up to? So I think there's a gap that we need to fill and take people on the journey. So we have to remember, while we're racing to become more efficient and to get an indicative quote or a price in front of the customer, there's also a value there of taking someone through the journey and giving them the reassurance that what they're putting in place will serve their needs should the worst happen. So I think that's really, really important. And just to the point around data, and do younger people trust with data? I just think the question is, does anyone trust, do you trust anyone with your data? It's a really important question. And are you willing to give it up? And for me, there has to be a value exchange. So if I'm giving you my data, what are you giving me in return? I.e., if you're going to collect all of this data from my wearables, what does that mean to me? Does that mean, free gym membership for a year? Does that mean immediate access to clinics and hospitals? Does that mean a significant decrease in my premium? You let me know what the exchange is for me giving you my data, and then we can have a conversation about it. So I just think that there has to be a value exchange, and the value has to be to the customer.
And Steph, would you agree with that?
Wholeheartedly. We're not very good panel debate, are we, Rose? We see eye to eye on a lot of things. But yeah, no, I completely agree with Rose in terms of it's that value exchange, and it's about knowing what is this going to be used for. And I go back to it again, but it's about the transparency. Why am I asking you for this information? People are happy to give it if they know what it's for. So I think, people are more receptive to that. So yeah, completely. Sorry, that was really a bit rubbish, but there you go.
So I'll ask you another question then, Steph. Obviously, these days we do have access to more and more data. And Rose, you mentioned wearables there. And I know that a lot of people wear iWatches and other similar sort of fitness-based pieces of technology that record their heart rates, their blood pressure, whatever it might be. And all of this data is being created. And we do seem to feel that because we can have it, we should use it. And I do sometimes wonder that we are creating a society and an industry where the more data we get, the more we try to overly complicate things by trying to find a way of using that data. Now, I'm not suggesting we go back to the age of quill pens and rate books when we didn't have as much data, but do you think we are in danger of saying, we just absolutely have to analyze, analysis paralysis, each individual person to the nth degree with data, and therefore actually we end up ruining the experience as opposed to improving it?
I don't think we're in any danger of analysis paralysis in our industry. I think if anything, we should be doing more, not less in that regard. I think it's from my perspective, it's about what are you doing with that data? And quite often, when I'm doing a session, I'm going through people's data and what we're seeing, what are the trends that we're seeing within their business and indeed the wider market. It's that so what moment. It's interesting, but so what? What's going to be the actions? I know this, how am I going to act it? And then how am I going to measure upon that afterwards? So I think, no, we certainly aren't, we should be using that data, but it's just gathering it. And what are we doing with it? Is it just interesting and nice to know, or is that informing and shaping our propositions? And is that helping us to develop? And I think where we need to be is starting to use that more. Look at where our data repositories are. What have we set up on? Have we got the ability to be able to, in real time, see what's going on with our businesses? And I think that that's something that we don't tend to do as well. I think particularly what we saw last year is those firms that I'm going to do for the first pivot, that did pivot and start to have a look at their, a look at their digital strategies. A big part of that was reviewing their data structures as well, which is really key. So the very basis at the bottom of it. And those that were able to real-time query and see what was happening were far more effective at not just surviving that pandemic period, but actually thriving. We see some of those businesses that were, really leaning into the data, querying it, understanding crucially what they don't know. It's the unknowns, starting to look for that sort of information. Those businesses were the ones that were up 125% year on year based on last year. Those that weren't were the ones that were struggling. So no, absolutely, it's all about the data from my perspective. And I think it's just about making sure that we're using it in a way that is effective in our business, not just interesting, but it's actually forming and shaping from there.
I totally agree with that. Oh, a little bit of feedback there. I totally agree with that. And I think that we can also get totally hamstrung with so much data. To your point, Roger, I think that we have so much data. Certainly at Lloyds, we've got a whole bunch of data from our customers via intermediaries. We've got loads. But to Steph's point, so what? And I think that we need to figure out how to use that data in a meaningful way to serve the customers and play stuff back to them. So we've got so much data, and it's like if we and then you could personalize propositions. You'd see more modularization within our sector of propositions. Are we going down a rabbit hole by doing that? I suppose that's a whole nother Protect Tech session, right? But you could then differentiate price for people more individually, differentiate propositions. I'd like to have a bit more of my premium weighted towards cancer than heart disease. You could do that because you'd have the data. I think where we're hamstrung is, how do we implement those things? How do we make a call on which one of those things that we could do to be better, to meet the needs of, on a more personalized and individualized basis for our customers? Which calls are we going to make, and then how do we do that in a fair and consistent way? So I think there's still a lot of head scratching moments around how do we answer that so what question that means that commercially we can stay in business, as well as we can also do the best for the customer as well.
I think it's very interesting what you've alluded to there is obviously as a result of COVID, all of a sudden we had to do stuff really quickly. Product providers, platform companies pushed through changes in days, whereas previously it might have taken them months, if not years. I mean, I can remember back in my big corporate days, we'd be lucky if a product development was less than 18 months. And now we can see things being pushed through really quickly because of that focus that COVID brought. And do you think that we'll continue with that level of pace now that hopefully the pandemic is starting to fade away? Rose, what do you think from your provider perspective there?
I think we've been creating momentum. If you look across the industry, you've just seen providers accelerating, and I'll use the second pivot. And they have pivoted. They've embraced technology, and they've tried to use technology to be responsive to customers, to make sure they can service intermediaries, to make sure they can offer solutions, amping up and raising the profile of like living benefits and value-added services, from virtual GPs to all of those sorts of things that many people probably didn't even know they were aware of. But then all of a sudden, we're giving different reasons to have different conversations with their clients, and so I'm really hoping that we continue to innovate and to embrace technology. But for me, it's kind of like a bit of a game of two halves, or it's a bit two-sided, because if you think about insurance companies, many of them are hundreds and hundreds of years old. They're grown by acquisition. There's loads of legacy infrastructure that sits, you've got probably people in the back office that are swivel chairing, some probably still using green and black screens, and that policy, that provider stopped having enforced, it's only got enforced business, so we need to go into this screen, and bear with me. And actually, if you do go into those teams within your businesses, you will see typically young people with amazing capabilities to speak to customers while managing a gazillion screens at the same time. So, never forget to thank those people in your business. So actually using technology to service, to enable a better and more efficient service within businesses for large insurance companies can sometimes be really, really challenging and at a significant cost. However, I will say our industry and the provider's ability to innovate at the front end of the product side has been significant. We have seen lots of personalization or more relevance in the product that means that intermediaries can have better conversations and more informed and broader conversations with customers. And equally, those that choose to go online are having different features pop up and being showcased around them. So, how they can engage with products, how they can see the relevance, how we can use those additional virtual services, how they can access and touch and feel their protection proposition, and how it can not just be there at the moment of truth, at the claim, because something serious has happened, but actually they can capitalise on those, what I'd call living benefits, monthly or weekly before they actually need, which actually shows that our proposition is not just something you buy today and that you hope you'll never use. You can buy today and you can use and use and use, but you don't necessarily have to get sick to use it. Do you know what I mean? I mean, like seriously ill. And I think that gives us such a broader footprint to be more meaningful and to have a really valuable part of the conversation with a customer in their whole holistic financial needs.
Do you know, we're nearly at the end of our time together, and when Steph and Rose and I practiced this a few days ago, I said time will fly. You know, it will literally fly by, so don't worry about us running out of things to talk about. And I'm just looking down at my list of topics, and we're less than halfway through what we actually put on our list to talk about. So I do want to just quickly look at one more of those topics, and maybe I'll address this to Steph, and then we'll wrap up. Now, Sabrina Molteni from PartnerRe made quite a few interesting comments about the distribution landscape, and of course that's changed as well because of COVID. Sales teams haven't been able to go and have face-to-face meetings with financial advisors. We haven't been able to do in-person seminars or anything like that. And again, what is the financial services distribution team going to look like over the coming years as we learn the lessons that we've learned from COVID? And how are we going to weave technology into that?
It's a big question. What have we got? 3 minutes?
3 minutes, yeah. So short and sharp and snappy.
Okay, cool. Well, I think in terms of pace of change, by the way, just to keep up on that, I think definitely it will continue as we're seeing. A lot of the technology has already been there for a number of years. Now we're just seeing people starting to engage with it and interact with it a little bit more and embrace it. So I think that's what's exciting. But, you know, we've heard some negative comments around, well, I don't need this. You know, I had one particularly depressing day. I remember ringing Rose about this. And one of the advisors said to me, well, we won't need this after COVID when we go back. So we'll just go back to paper. And I was like, no, you know, why would you want to do that? So I think it has fundamentally changed, but all it's done is accelerate. So I think we were naturally going down this route. We started to see more engagement in terms of virtual platforms, in terms of how we gather information from the customers, how we engage customers. We were starting to see that change anyway. But what this has done is just poured petrol on the fire, essentially, and has just really ignited that and made us go back to it at a rapid pace. So yes, there will always be some advisors and some businesses that will want to go back to the good old days. But I think by and large, people have seen the value savings, like Andy was saying earlier. They've seen the savings in time. They've seen the efficiencies within their business by acting in the sort of ways that we are now. But I don't think people will want to go back. It will be a hybrid. It will be a bit of both, you know, and I think that's really, really exciting. And we should continue to promote that as an industry, as providers, as technology companies. We should continue to be positive and should continue to support those messages.
Fantastic. So to close, I'd like to do what I always do at ProtectX, and that's just to ask you to finish off with probably your biggest wish for the future of the protection market. And of course, as this is an InsurTech special edition of ProtectX, I guess that wish has to be technologically orientated. So Rose, what's your one big wish for the future of the protection market?
So I'm going to pick up on something that Vishala said around, and I hope I haven't nicked Steph's bit because she actually commented this, about the ESG piece and the socially responsible piece. So I really wish, and my hope is that we see purpose and value and that responsibleness really emanating through our propositions and through our brands, because people aspire to be a better version of themselves. So therefore, will they buy from a company, from an intermediary that looks like they could be aspiring to be a better version of them? So I think I'd really, really like to see people wearing their heart on their sleeve and their purpose on their sleeve, and using technology to showcase that as well.
Great. And Steph?
I think to continue being from a techie perspective, which I totally love Rose's response, but let's go more technical. I guess from my perspective, my hope is that we continue to lead the world in terms of what we're doing here in the UK, in terms of how we're making things better. We're looking at, there's so many things that we're doing that's actually being observed by the US, by Europe. Actually, we're seeing that here by some of the platforms that we've got, those digital first platforms. And I hope that more technology businesses will continue to actually enable and foster the innovation that these product providers have. The technology's there, so I want us to be able to be there and supporting businesses that they can deliver these things, that we can start to talk about proper living, breathing protection policies. So not just a one and done in the drawer and never think about it again, but actually create and enable the creation of some of these products that will truly be a part of people's lives and not just something that's stuck in the drawer for when the worst happens. I think that's what we can do, and I think we can have a really positive impact to do that.
Steph, Rose, thank you so much for coming on the live part of the show today. And honestly, we could genuinely have carried on talking for at least another half an hour, possibly even another hour, because the speakers gave us so much material to debate. And what I'd like to think is that that debate will continue throughout the rest of the day. So just because the live event is going to finish in a few moments' time, please continue to talk about the issues, the topics, and the questions that have been raised today in ProtectX5. Use the Twitter hashtag ProtectX2021 and let's continue having the debate. I know that you're probably all desperate to get away, have a coffee, have some lunch, but please do continue the debate throughout the rest of the day. Thank you so much to the watch party down there at the Andaz Hotel in London. Hope you enjoyed the in-person experience for the first time in 18 months. Thanks for coming along. And thank you everybody for tuning in to ProtectX5. Protection Review will be back at the Landmark Hotel on the 8th of December for the conference, dinner and awards. And there will be a ProtectX6, and that will be on the 17th of March 2022. So thank you again for tuning in today. And until next time, see you later.